I've had a lot of you reach out about home equity line of credits and also refinancing your home. So I figured I'd make a quick video about how to refinance your home from start to finish for beginners. So pay attention, take some notes, and if you have questions, don't forget you can always comment below or you can shoot me an email if it's something more private, and I'd be happy to hop on a one-on-one call with you. So make sure if you like this video, you like my channel, subscribe, share this with your friends and family. I appreciate all the love and all of you that have been supporting me over the years. So with a refinance, it's similar in terms of the process that you go through just like a purchase. However, the one thing that a refinance doesn't have is a close of escrow date. So refinances can take 30 days, 60 days, 90 days, or you could just cancel the deal all the way through. In my opinion, there's no real urgency in a refi, and that's why honestly, I'm not a huge fan of them, because I've had clients over the years that will literally do a refi and then at the final signing, they cancel and they say they don't want to do it for whatever reason, because there is a rescission period that you get if it's your primary residence. You get a couple of days to think about it, and if you decide to back out, you can back out. So with a refinance, one of the first things we do up front is a total cost analysis. So we call it a TCA. This is something that every lender should do up front for you so you know exactly what the refinance is going to look like. Now, some guys might just rattle off some numbers to you saying, hey, I can lower your rate to this amount and it'll save you X amount of dollars. And you're like, all right, cool, let's do the deal. I like to take it a step further. So what we do with our TCAs is I will ask you to send me your last mortgage statement. So first and foremost, make sure you have that handy. If you don't have it handy, go find it so that way you can get that to your lender. And the reason why I ask for the statement is because I like to do an analysis to say, this is your current mortgage. Now, if we look at 2, 3 other options for refinancing, what does that actually look like on paper for you so you can understand and digest the numbers? It's not just how much can I save my payment or how much is it going to cost me to do this or what's my interest rate. You want to look at the strategy again, because if you're not going to be in your house for X amount of time, then why are we refinancing? Or if your break-even period is too far out and maybe you plan on selling, then maybe we need to look at a different strategy. So refinancing, in my opinion, can get a little more complicated than just a purchase. Now, a lot of times when you're just doing a purchase, it's all about the excitement and now I just want to close on my house, I'm super happy. Many of you might skip over some of the fine details. But now that you're in your house, you don't want to, 1, throw away your home equity, and 2, put yourself in a bad position to where you could potentially face not making your mortgage payments and then potentially go into foreclosure. The honeymoon period is over. You are now a homeowner. You have to make the right decision with your equity so you don't put yourself in a bad spot. So again, the first thing that we're going to do is look at that TCA. We're going to look at your current mortgage. We're going to break down some options. That way you can see for yourself, is it worth me paying another point for the interest rate? Can I save more money on closing costs? What do my options look like? Once you decide on which strategy works best for you, we move forward with the refinance. Now at that point, we're going to go through the same process just like buying a house. We're going to pull your credit and we're going to send you a list of all the documents we're going to need to go ahead and move forward with your refi. And again, this is why I don't like refinances, because life gets in the way and you're busy. So when I send you a list, it might take you a week or 2 or 3 to get me any paperwork. And guess what? In that meantime, I cannot do anything with your loan. So if you're doing a refinance, the one thing I would tell you is to make sure that you are prepared to move quickly, just like you did when you bought your house. Because as a lender, once we decide to move forward and we have your application, we want to lock in your interest rate. Now, typically when you're doing a refinance, you're locking your interest rate for about 30 days. Maybe you might gamble on a 15-day lock, but more often than not, you're locking for 30 days. So most of you don't know that when a lender locks your interest rate, we have to then select how many days we want to hold the rate for. The lower the lock period is, typically the cheaper the rate will be, but the standard in locking is about 30 days. So again, if we start the process today and we go past the 30 days, your lock expires. Now, you can still keep that lock, but you will have to pay a lock extension fee, or the lock expires, and then typically what happens is you get the worst case scenario pricing for the day that you locked your interest rate. So again, you have to have some urgency behind this process. If not, you can easily lose the rate and the strategy that you covered with your loan officer up front simply because you just took too long. So make sure you got your documents ready to go. Once the file hits our processing department and our underwriters, they're going to order the appraisal. Again, this is another piece to the puzzle that can drag this process out, because the appraiser, if they need to get into your house, they're going to contact you and you have to let them get into your property. Unlike when you bought your place, the appraiser could use a lockbox to get into the house, or the listing agent could show up, let them into the property, or even your buyer's agent could have let them into the house. But there's no one else in the transaction anymore, only you. So when the appraiser calls you, if you take a week to let them get in the home, or you guys are playing phone tag and you can't get them in the property, I can't do anything with your loan. Again, we sit idle. Nothing happens. We need the appraisal in order to move forward. So those two things can literally hold up refinance. It could frustrate you as a client and you could quit altogether. So make sure you have your documents, make sure that you're responsive, and make sure you get the appraisal done as soon as possible. Once the appraisal comes back, we go through the normal process just like a purchase. The underwriter signs off on the appraisal, make sure that everything's good. We get your docs out for you to sign. And again, you go to the title company to sign your loan documents to get everything funded. Now, let's say you're traveling, or let's say you don't have time and maybe you're somewhere further away. You can always have a mobile notary come and sign you wherever you are. So I grew up in Hawaii and a lot of my clients were investors at the time and they were back home in Hawaii. So we would always have to ship our loan documents to Hawaii for them to sign. We'd get them back and then we'd be able to fund and close the deal. So don't feel the pressure that you have to be here in your city in order to refinance your house. If you're on a family vacation, I've had clients go to Starbucks to sign their loan documents. But one of the cool things about the mortgage industry is that we're slowly ever evolving to where some of your documents can be digitally signed. So now they usually have some form of hybrid signing where you can sign a bulk of your documents online, and there's still a few documents that you have to sign in person with a wet signature with a notary there. So the process has definitely evolved slowly over the years. It's not like those 100+ pages of documents that you had to sign back in the day and you left with this phone book that now you had to go keep somewhere in your house. Things are a little easier these days, but you still have to sign. And then once the documents come back to your lender, like I mentioned earlier, if it's your primary residence, they do give you a rescission period where you actually have the time to think about the refinance if you want to do it or not. You can back out in the middle of that rescission period. And if you do, the transaction is null and void. Everything's canceled. However, you paid for the appraisal, so you're not going to get your money back on that piece. So that might still cost you another $500-600 as far as the appraisal goes. But if you decide to move forward, you waive your rescission period, the deal closes. Now you got a new loan. And just like when you purchased your property, depending on the month that you closed in, you will get a grace period before your first mortgage payment is due. So we're in the month of June. Let's say you refinance your house, you closed in June. Your first mortgage payment is going to be August 1st. So this is where, again, you get a little bit of leeway with that first payment. That way you're not just doubling up payments from the old mortgage to the new mortgage. A lot of people like when they go through that process because it gives them some time back to not have to make a payment. Then they can pay off credit cards or anything else that might come up in that time frame. But purchasing and refinancing, two very similar transactions, just a couple of nuances on a refinance, but generally speaking, that's what you're going to be dealing with. The one thing I would encourage you to do is when you talk to a lender about refinancing, ask them to do an analysis up front for you. Don't just ask for a loan estimate. Ask them for that analysis to show what your current mortgage is and what does that look like comparative to the other loans that they are recommending for you. To me, that's one of the easiest ways to determine what makes sense. Because if you're like me, I'm a visual person. I need to be able to see my options. And that way I can determine what means the most to me to be able to make the right decision. If they're just rattling off numbers, throwing things at you via email, that's a little hard to figure out. You might want a second opinion at that point. So hope this helps you. Refinancing is still a big thing because I see a lot of folks that their credit cards are getting maxed out. So you don't want to continue to refinance and use your house as a piggy bank. You've worked hard to build this equity up. Don't throw it away by making a stupid decision by just refinancing over and over and over again. Do it right. That way you put yourself in a good spot so you can get back on your feet and not potentially lose your house. Share this with a friend that's thinking of refinancing and subscribe to the channel. I'll see you later.